And now, family members and listeners alike, let's look at positions that are going to be increasing their dividends, okay, during this summer. And these positions will get you PAID. Now, the key is that you must act upon these positions, perform the appropriate drill down, and govern yourself accordingly now to get PAID from these positions. Please take copious notes. Now, the uber wealthy are very much aware that dividend growth is one of the key ways to becoming wealthy and obtaining and maintaining your economic liberation. Now, while any stock boasting a big stated yield is sure to grab your attention, if that dividend isn't growing, if it's not increasing, it's actually shrinking as inflation eats up more and more of the income that particular position is generating every year. That's why yours truly regularly keeps, my eye. What I normally do is I regularly keep my eye on dividend increases. And that's also why I'm looking at a bundle of positions right now as we speak that are very likely to up the ante on their regular payouts over the next few months. And I'm talking about during the summer. So, if, beloved, you are an income investor, it's increasingly important to focus on dividend growth because guess what? Dividend growth is slowing. Okay? Now, today, I'd like to discuss with you 8 dividend paying stocks that I expect will increase their regular payouts to shareholders during this summer. Some are offering raises from a position of strength, while others are tossing them out as an act of desperation. First position I want to give you is the big cat, Caterpillar, symbol CAT. Currently has a dividend yield of 3.1%. Now, the big cat, Caterpillar, comes with a big potential caveat. Listen to me closely. In that it is very possible that we won't see a dividend increase out of the big cat this summer, but we should. Starting in the 1990s, the big cat rolled out a dividend increase every summer, okay? Starting with its quarterly payout date due in July. However, from 2014 to early 2016, Caterpillar shares dropped more than 45% as the business hurtled steadily to the downside, and the company's revenues ended up plunging from $55.1 billion in 2014 to just $38.5 billion in 2016. But the big cat has been rebounding, more and more, and this past year, is coming off of a massive first quarter beat that saw the big cat amp up its full year forecast. Now, cost cuts are delivering results and cash flows are improving. So don't be surprised if Caterpillar takes one more step towards normalcy with a dividend hike announced sometime next month in June. The big cat, symbol CAT. Next position I want to give you is EDR, symbol EDR. Currently pays a dividend yield of 4%. Now, EDR, formerly known as Education Realty Trust, is a niche real estate investment trust, or REIT, that focuses on collegiate housing, housing the students at colleges. Now, the company owns or manages 86 communities for college students centered around 53 universities in 24 states. Now, while EDR tends to go through its fits and starts, it stops and starts, shares have been more than quadrupled out of their 2009 lows, and the company boasts steadily rising revenues. Now, its dividend has also improved slowly but steadily by about 27% over the past 5 years. Now, the company typically announces a dividend hike in mid-July. Write these companies' names and these months down, okay? So EDR typically announces a dividend hike in mid-July. And this year, EDR could use it. It's off 11% year to date and didn't get much help from a Q1 report that showed double-digit improvements in the top line and core funds from operations. So EDI, mid-July, and then we had the big cat next month in June. Duke Energy, symbol DUK, current dividend yield of 4.1%. Now, Duke Energy, on the other hand, has had a decent enough 2017, up about 6% to only slightly underperform the S&P 500. Not bad for a sleepy, boring utility stock. Okay? Now, Duke has paid out an uninterrupted stream of dividends for 90 straight years. I said 90 straight years. Now, if Duke wants to make a statement, when it announces its next hike in July, it'll hopefully do better than the token 3.6% improvement it doled out last year. Duke Energy, July announcement for dividend increase. Next company I want to give you is Simon Property Group. Simon Property Group, symbol SPG. Current dividend yield of 4.3%. Now, the Simon Property Group is yet another stock that could use a substantial dividend boost to rally the troops. Now, SPG, Simon Property Group shares have been slammed over the past year or so, off roughly 30% from the all-time highs set in August of 2016. It's really more story than fundamentals. Simon is going through a slow 2017 operationally speaking, though analysts still expect the top and bottom lines to grow this year and next. Now, the increasing crawl of Amazon has investors fleeing the retail space arena, and some are throwing the baby out with the bathwater. You see, that includes Simon as well, because Simon is the largest mall operator and, in fact, the largest REIT in all of the United States. Now, Simon, which has aggressively grown its payout by 75% over the past year, isn't necessarily a lock to upgrade its payout this summer. SPG isn't consistent about when it hikes its payout. Sometimes it goes a couple of quarters, 1 quarter, 3 quarters. But Simon has upgraded its dividend in February and hasn't announced an improvement for the current quarter. So it's likely that come July, SPG will be writing larger checks to its shareholders via dividends. Next position I want to give you is National Retail Property, symbol NNN. Pays a dividend yield of 4.6%. Now, National Retail Properties and Simon Property Group are two peas in a pod. Now, while NNN isn't focused on malls, it's an extremely wide-based retail REIT, and it boasts 2,535 stores across 48 states here in the United States. Now, the company's revenues are growing. Its income is swinging higher, and analysts only see good things going forward, despite what the overall narrative might suggest. And yet, NNN, like SPG, is off roughly 30% over the past year or so. The stock is a potential bargain at this point, and the temptation should be just a little sweeter come July, when NNN is likely to take its dividend a notch higher for the 28th consecutive year. NNN dividend announcement and increase in July. This next company has paid us over and over and over again. They like to call themselves the monthly dividend payer. I'm talking about Realty Income, symbol O, dividend yield of 4.6%. Now, if Realty Income doesn't increase its payout this June, talking about next month, you should put in a call to the sun to see if it plans on rising anymore, okay, or being in the skies. Realty Income and dividend increases are essentially synonymous at this point. The company calls itself the monthly dividend company, boosting and increasing and bragging about 78 consecutive quarterly improvements to its monthly shareholder check, which spans 562 straight months of payouts by the company. Now, for the record, Realty Income, despite outstanding occupancy and high-quality tenants, is in the same boat with SPG and NNN, being clobbered since 2016 as Wall Street spins the tale of retail's demise. Okay, to talk about retail market's demise and retail space. But it's shaping up to be a bargain, talking about Realty Income. And it's a dividend growth dynamo to boot, improving its payout by about 45% in the past 5 years alone. Realty Income is amongst the most tenacious dividend growers of any publicly traded company. Next company I want to give you is W.P. Carey. Carey. C-A-R-E-Y, symbol WPC. W.P. Carey, symbol WPC. Dividend yield of 6.4%. 6.4%. Now we have another REIT in WPC. Though unlike the prior few REITs, WPC is much more diverse in its holdings. Its portfolio is about 30% industrials, 25% offices, 16% retail, and 14% warehouse distribution. Now, with the remaining allocated to self-storage and other types of property as well. Now, it's also geographically diverse, with roughly 2/3 of its real estate based in the United States and most of the rest in Europe, including 9% in Germany and 5% in the United Kingdom. Now, while shares of this REIT have essentially traded flat for 4 years, the company has been a pinnacle of earnings growth. And WPC has increased its payouts in 63 consecutive quarters, including 75% growth over the past 5 years. It's due for another announcement in June next month. And I don't expect W.P. Carey to miss a beat. Next position I want to give you is McCrary Infrastructure, symbol MIC. That's McCrary Infrastructure, symbol MIC. Has a dividend yield of 6.6%. Now, last but certainly not least is McCrary's Infrastructure Group, symbol MIC, which owns, operates, and invests in several infrastructure companies, including things like bulk liquid terminaling, airport services, and gas processing and distribution. Now, this diversified blend of holdings, beloved family members and listeners alike, isn't just ideal for mitigating risk. It also helps support a rapidly climbing payout that has grown each quarter since 2012 by a total of 520%. Now, admittedly, that's a bit inflated because that counts the 20 cents payout MIC restarted with after cutting its dividend in the midst of the Great Recession. But even 10% improvement over the past year isn't anything to sneeze at. Now, McCrary just pushed its dividend high just a few days ago, but investors can expect another announcement at the very beginning of August. Put that down on your calendars, your portfolio calendars. August, McCrary Infrastructure Corp, symbol MIC. Family members, just provided you with 8 companies that will be increasing their dividends. Talking about McCrary Infrastructure Corp, symbol MIC. W.P. Carey, symbol WPC. Realty Income, symbol O. National Retail Property, symbol NNN. Simon Property Group, symbol SPG. Duke Energy, symbol DUK. EDR, symbol EDR. The Big Cat Caterpillar, symbol CAT. A list that is undeniably super poised